Good morning, everyone. Jason Jenkins. It's June 1st, start of the week, Tuesday. After the long weekend, I'm gonna do two videos. I'll hit on traditional markets and I'll do crypto, and I'll kind of separate them out. First things, I do have BTC up. We're in the middle of the range, but I'll highlight that in the crypto update. Also, I'll get into like what I'm doing on this Riot position, which is a minor, kind of a derivative play of if you want to use the legacy traditional markets and like trade options around some of these other plays that are outside of just digital assets. This is one I've liked since we've been accumulating down here near the 200. So anyway, I had some calls there I booked. You're up pretty good. You're up 6% this morning. So if you guys have been following me on that, I'd take some in here. There's a resistance, but still just keep adding and reducing. This is going to be a longer term play. I think you're going to go back to 50, 60 pretty easily on this one. So it's a double from here and eventually probably new highs once Bitcoin makes new highs. But that could be 6-12 months from now. Anyway, just keep trading that one around. So back to the traditional markets. I covered long bonds this morning. So we had another great call. You had the futures roll, but the continuation chart, when we were up here towards the top of the range, where's my notation? This is 3 standard deviations, 2 or 3 standard deviations, but this has been the top of the range, bottom of the range, bottom of the range. So treasuries will tend to trade much more range bound, just the nature of how the big boys play the markets. They're long and short. The dealers have hedged positions, but you tend to get a lot more back and forth. So find the ranges, you use them. This is short covering opportunity this morning. So I like being core short 30s. We've had for over a year now. And this was another opportunity to reset shorts. I was saying buy 158 puts. Now you can take those off, cover some futures, but still the same trade there. It's rates up, curve steepening, bear steepener. Twos will be sticky. The long end, more inflation you get, supply, blah, blah, blah. It's all bearish for duration, long bonds. S&Ps, I just highlighted today. We held pi twice last month, and then now this morning you get up towards the all-time highs, and the market struggled. I think we had some PMI data that maybe showed some stagflation, but anyway, I just put out the signal literally on the highs of the morning that you should be coming out of longs, and then boom, market just dropped right back to pi here near term. So if you're day trading this, there's maybe a little bit of opportunity to be a little bit long here, contrarian. If you caught the short off the open, that's different. 1 minute rolled over. You could have been short here this morning and covering into pi. So S&Ps, look at the daily cycle. Stocks back on the highs. This isn't a place where you need to be long. You can kind of just sit and wait. So if you bought stuff well into the panic when the VIX was surging a couple of weeks ago, now you got rewarded for that. And you can just sit and wait. If we make a new high, then you can get back in long, add to some long names. But right now, I think you're sitting, wait and watch as this daily cycle's high, sine wave's high. You've had a pretty good bounce on the other D trend oscillator. It's going to be the same for the NASDAQ. All right, NASDAQ, not back to the highs. So tech's been a little bit weaker. Let's watch the 8. You can see the cycle's high again. So maybe we started Monday or Tuesday here up, and let's see if we get some follow through to the downside. Near term, you guys, you could be, if you bounce back up here, halfway back up this wall, you could be day trade short. It's the same for S&Ps. I guess we should even look at the Russell small caps. I think they had a pretty good week last week. Still just a wide chop, really. So lots of highs up here. The better place to be a better buyer was in front of 2100. So again, same thinking as S&P. Guess we'll do the Dow lastly. Dow's back to the highs. S&P looks the strongest. That includes energy, with most likely with crude breaking out. I'll get to that in a second. So same thing with the Dow. You're back near the highs. It's not a place to be chasing longs. Oil here on the left. I talked about that this morning. It's been a great place to be long. You're starting to break out again. We'll see if this is a false breakout or not, but I have calls at 68. If this market, if they start to chase energy here and it stays above 68, there's room to go to 75. Really, the top of the channel is not till 80, which is going to get a lot of mainstream headlines. Financial media will be all over it. The highs from 2018 is closer to 75. So I'd stay long for a move maybe to 75. We had a great call a couple of weeks ago right here into the bands or into the regression channel. I said to buy. It was pretty much the low at 62. So nice move there. Got rewarded for it. Congrats if you followed. If you're not following, this is why you need to be part of the CycleEdge paid room. It's $20 a month to make calls like this on the low. This is some of my model, our timing, my expertise. We have some of the best signals and timing. So you're not going to get that from a once a week free report. But for $20 a month, guys, I mean, it's a no-brainer. If you really care about being involved across asset classes and getting the timing right and the edges. That's that. Oil, gold. I missed this gold trade. I did. Could have got long here through 1800 and kind of missed it. I've been wanting a pullback, maybe 1850. I think the market will struggle here to probably puts in a lower high in front of 1950. I just kind of missed it, so I don't have a huge opinion on the gold market. Silver has been more bullish. Should have been long at 24.25 and then shorting gold against the long right now, but I don't have that on. We had a good call on some of the commodities. So corn held the bands, put out the buy signal down on the lows, take some profit today in front of 700. It's probably the same on wheat. I didn't look at that this morning. Yep. Nice commodities all bouncing. Same thing. There's your soybeans, boom, up. Same higher low, palladium, copper, same thing. All higher lows in commodities, not surprising. That's just been a screaming uptrend. Okay, lastly, let's look at the euro and the dollar. Still dollar bearish, euro uptrend. I've been waiting to see if we're gonna have a big picture turn. This long term trend line in this whole area if we reversed around 122, and it's looking more like maybe we want to retest the highs. Watch this pivot right here, 122.65, small resistance. If you get above there, the level is really 123.5. That would probably matter for oil too. You probably want to take some gains on oil if we get the dollar down that much. That's all I have to say about that. I mean, to confirm like dollar strength and rolling over, we wanted to see oil break down from 60. It didn't. And then you didn't get any risk off move with stocks didn't break. And you didn't get a new low in the euro, which would have been down here at 121.30. There's just nothing, there's no risk off type of scenario in sight. Stocks are bullish, oil inflation trades up, rates are up. If it's risk off, it would be stocks breaking, dollar up, bonds would catch a bid, and oil would probably be selling off. So it's the opposite. We're just in like a reflation inflation trade. At some point, maybe the commodity move and the inflation really starts to wear on growth and equities. And that would be the stagflation trade. At that point, bonds will be choppy. You could still sell duration because of the inflation problem, inflation risk. But you'll start to see the dollar firm up and equities would probably start to crack. At least you get a lot more down moves, but I don't think we're there yet. Some of the data might start to show that, maybe back half the year. So far, just stay what's been working. Rates up, short bonds, long commodities, long energy, and then you can still pick your spots in equities because stocks are been one of the best places to be too. I mean, it's still in an uptrend. Okay, guys, hope that helps. See some of you in the live room. If you don't know how to sign that up, I'll put the links in this video. You can go to CycleEdge on the Substack platform, search for CycleEdge or search for me, or maybe it's just easier to go to my page, jenkinscm.com. And you can pop in there, just put your email in. You can join, check it out for kind of what we do for a week. Or the weekly is free, but my audio updates, the written reports, updated like analysis, quick videos like this, that's all happening here in the paid members room. It's only $20 a month. I've never seen anything financed for that cheap. So kind of a no-brainer. That's where the activity is going to be for me on the retail side. And yeah, have a great trading week, and talk to some of you guys tomorrow.